Are you having trouble deciding where to invest your hard-earned money, stocks or Bitcoin? Don't worry, in this video we'll explore the characteristics of these two popular investment options. While both stocks and Bitcoin have gained popularity in recent years, they have very different characteristics and methods of valuation. So, let's dive in and compare these two investment options. What is Bitcoin? Bitcoin is a digital currency that is not controlled by any single authority. It was created by someone using the name Satoshi Nakamoto back in 2009. With Bitcoin, people can send and receive money without needing banks or other middlemen to help. Instead, transactions are recorded on a public ledger called the blockchain, which is run by a large network of computers all over the world. You can buy, sell, or trade Bitcoin on different online exchanges, and some merchants even accept it as payment for goods and services. One neat thing about Bitcoin is that there will only ever be 21 million Bitcoins in existence. This is different from other currencies where new money can be printed endlessly. Stocks, on the other hand, are little pieces of a company that you can buy and own. When a company goes public, they issue stocks that people can buy and sell on stock exchanges. So, when you own a stock, you're actually a part owner of that company, which is pretty cool. And if the company decides to pay out a share of their profits, known as dividends, you may be entitled to some of that too. If you want to learn more about stocks and how they work, check out our awesome video. We've included the link in the description below. Like most things in this world, the price of a stock is determined by how many people want to buy it. When people are excited about a company, the price of the stock goes up. But if people are feeling worried or uncertain, they might sell their stocks, which can cause the price to go down. However, price and value are not equal. Price refers to what you pay for something, while value refers to the quality and usefulness you receive in return. For example, a product may be expensive simply because of hype and demand, but that doesn't necessarily mean it's high quality. Take a pair of shoes for instance. The price may skyrocket after a famous person wears them, but everything else that makes up these shoes remains the same. It's still the same shoe, it's just that more people want them. Conversely, the same shoes may be sold at a lower price during a clearance sale, but they are still the same shoes. In both cases, the price changes, but the value remains the same. In the case of stocks, the price represents what buyers and sellers are willing to trade the shares for at a particular moment based on factors such as supply and demand, market sentiment, and other economic indicators. The value, however, is the intrinsic worth of the company that the stock represents, determined by its assets, revenue, earnings, and other financial and non-financial factors. Therefore, while the price of a stock can fluctuate wildly based on market conditions, its underlying value is more stable. Remember that a stock is essentially a piece of a company. Owning a stock means you own a part of the business, which is focused on generating money. If the company is financially healthy and is making money, the stock becomes more valuable. Conversely, if the company is struggling, its value will decrease. Thus, the true value of a stock, also known as its intrinsic value, is closely tied to the financial performance of the company rather than the performance of its stock price. As discussed, price and value are two distinct concepts. How does this relate to Bitcoin? Similar to stocks, the price of Bitcoin is determined by the demand and supply in the market. If there is high demand for Bitcoin, the price will increase, but if there is less demand, the price will decrease. Another factor that can influence the price of Bitcoin is the cost of mining new Bitcoins. Bitcoin mining is the process by which new Bitcoins are created, and transactions on the Bitcoin network are verified. Although the supply of Bitcoins is limited, not all of those Bitcoins have been created yet, and new Bitcoins are still being released into circulation. Mining Bitcoin takes a lot of electricity and computing power, which can be costly. As the cost of mining increases, the price of Bitcoin may also increase. But what makes Bitcoin valuable? One of the most significant features is its use as a medium of exchange. Like any other currency, Bitcoin can be used to purchase goods and services. However, one of the key advantages of Bitcoin is its ability to facilitate transactions without a middleman, such as a bank or credit card company. This enables quick, low-cost, and secure transactions, without the need for expensive intermediaries. Bitcoin can also be used for international transactions. Unlike traditional currencies which are subject to exchange rate fluctuations and cross-border fees, Bitcoin allows for instant, secure, and inexpensive transactions across borders. This makes it an attractive option for people who need to transfer money internationally. Because of its limited supply, Bitcoin is seen as digital gold. But unlike Bitcoin, Precious metals like gold and silver can derive their value from other sources apart from being a medium of exchange. These precious metals can be used in jewelry and decorative arts. Gold, in particular, is also used in electronics, aerospace, and other high-tech industries because it is a highly efficient conductor of electricity and does not corrode easily. Silver has similar properties and is also used in photography, medicine, and other industries. Since Bitcoin can only be used as a medium of exchange, its value is limited to this function. Returning to the topic of stocks, the value of a stock depends on the business of its company, which can be determined by examining its company's financial statements. The financial statement serves as a report card, providing investors and stakeholders with a detailed summary of the company's financial results over a particular period. A high-quality company is one that consistently generates strong financial results, maintains a healthy balance sheet, and has a sound financial strategy. Conversely, a low-quality company may exhibit weak financial performance. If you want to learn more about financial statement analysis and how to evaluate a company's quality, check out our video on the topic. Additionally, the value of a company can be determined by assessing its future cash flow, which involves making a careful estimate of how much cash the company will generate based on past performance. We have previously discussed the concept of a company's valuation in a video, so be sure to check it out in the description below. Valuing Bitcoin is more challenging than valuing stocks because its value heavily relies on its service as a medium of exchange. While most people try to value Bitcoin by comparing its price to US dollars or other fiat currencies, they may also compare it to other assets such as gold or other cryptocurrencies. However, it's important to remember that price and value are two different things. Analysts use various methods to evaluate the popularity and health of Bitcoin. For example, they might analyze the number of transactions or the computing power used to mine new Bitcoins. This helps them understand whether more people are using Bitcoin or if its popularity is declining. If Bitcoin is more convenient to use as a medium of exchange, then its value will increase. However, estimating the true intrinsic value of Bitcoin remains a challenge. In conclusion, both stocks and Bitcoin are investment options that can offer potential returns, but they operate in different ways and come with their own unique risks and opportunities. Stocks offer investors the opportunity to own a share in a company and benefit from its financial success. But this success can also depend on various external factors such as the economy, competition, and market trends. Bitcoin, on the other hand, operates independently of any central authority and can be used as a medium of exchange. However, its value can be volatile and heavily influenced by market sentiment and adoption. When deciding between stocks and Bitcoin, it's important to consider your investment goals, risk tolerance, and overall financial strategy. Remember to do your research and seek the advice of a financial advisor before making any investment decisions. We hope this video has provided you with some valuable insights into the differences between stocks and Bitcoin. Thanks for watching MedDoc Invest, your partner in health and wealth. Happy investing!